into these lows and very definitely bullish into the lows. And we've been able to get a little bit of a lift. Now, it's not bullish at the highs. It seems as if Max is more apt to be rotating the markets from the highs back down to the lows and then trying to figure out where the buy trade is located. So Max is on the hunt just now for Goldmans, trying to find where Goldmans are busy and active. And at the moment, selling the highs, trying to flush out the Goldmans trade, and selling back into that top edge makes a lot of sense. That's the trade that's currently on. And this is a 5-second chart, by the way, you've just looked at. 5-second chart. And let's see if it decides to take out the bottom edges. Let's see if it decides to go after the bottom edges this time. Max is currently short from 56 at the moment. 56, currently short 56s on Max. Took another quick sell at 58s that time. Took it down to 40s for another 18-tick profit. Took a bit of profit in at the 40s because the value has now diverged on that. So that was a very nice 20-odd tick winner for Max there. For easy money. Pretty easy money. Pretty much, Tim. It's I mean, obviously, equities generally, as a rule, should do the same as each other most of the time. So obviously, if Max is selling on the Dow Jones and the Dow Jones is discounted to the S&P, it's a very good S&P sell. If the S&P is already discounted to the Dow Jones, then it's not so good an S&P sell, but it makes it a very good Dow Jones sell, right? So yes, you can use it against the S&P because obviously we do index arbitrage against this as well. So if you've got the big divergence, for example, on that last sale on the Dow Jones, the S&P was slightly premiumed against the Dow Jones, and that made it a better sell on the S&P into the top edge at a price of 96s. Well, that 96 price dropped down to 94s. They gave you a very nice 8-tick profit. And that's a reasonable proposition. Reasonable proposition for anybody. Well, exactly the same as we've just mentioned there, George, as well, that if the NASDAQ is at a bigger premium to the Max trade, then it makes it a brilliant trade on the NASDAQ as well. So, you know, but the S&P is a lot closer to the idea behind the Dow Jones rather than the NASDAQ. So it's a little bit more solid on the S&P rather than NASDAQ. The NASDAQ does have the ability to go off on its own every now and then, but you know, we should still be able to make some good decisions on the big outsider trade. I mean, a good example actually was the NASDAQ sell at 1533 or 1534, George. The Max was selling, the Dow Jones was selling, the S&P was selling, and the NASDAQ had just retested the high price. And that's when the NASDAQ was testing into the 12,722s. And literally within 4 minutes, it was trading at 708s. So it made a very, very quick dash to the downside on a short-term scalp trade, which made a lot of quick cash on that one. So it's just effectively the same trade. It's just we're going to get bigger premiums or discounts on some of the other indexes. Max is just bidding for some lows here at the moment into that bottom edge on the Dow Jones. Max just picked up some 47s. It's just traded 57 there for 10 ticks and a nice little quick profit. Stops at break even. Max is still buying, so buying on down ticks still at 46.47s. Trading at 56s. Just waiting on a pause at the moment. Waiting on a pause. Max has gone a little bit offered at the moment, so just pausing down into this down tick. Still bidding for it. It's going to be a buy on down ticks at the moment, so that's where the trade's at. Nasdaq's just run some stops if anybody's watching the Nasdaq, just to see what happens with those Nasdaq stops. Max is back in on the Dow again.